The Freqtrade developers have done a tremendous job making a trading bot and providing us with lots of algos to use and to learn. In this post I'm going to test the Cofibit strategy to find out what it does and how it performs. If you watched my earlier videos, then you know you can find these strategies in the GitHub repository of the Freqtrade developers. If you did not know this, then you can follow the instructions on the screen to get to their repo. I will try to investigate all of these strategies to find out which are good strategies we can use for our bot. And if not, it will still be a good learning opportunity, so we can use this for developing our own algo. The Cofibit strategy is also part of the mentioned repository and collected by the Berlin guy in CA. But if you open the code, this file is taken from Slack by a user called Cofibit. The original author is not mentioned, but as always, all credits go to the author and collectors of this code. I'm just the guy that tests if it performs well. Let's dive into the code of the strategy to find out how it works. I will then do some backtests, optimizing and final conclusion to see how well the strategy performs and if it's worth our time and money to actually use it. If you are not familiar with the way the strategy files are set up for the Freqtrade bot I'm using, then watch this and my earlier videos to learn how to interpret the code. First of all, there are import statements here that load the additional modules that are used in the strategy's code further down. Then the strategy class is defined and we will find some optimization parameters over here. These are used in hyperparameter optimization. The actual spaces where the optimal settings should be found is a little bit more down the code. Then the obligatory settings for each strategy. Each strategy has its own ROI settings where profit is taken when a specific percentage is reached after a set amount of time. Also, the stop loss is set, and the time frame where the strategy is built for is determined over here. My experience until now is that a strategy can sometimes perform better on other time frames. So let's find this out later if it's also the case over here. Then we come to the block of code where the indicators are defined that will be used. In this case, the strategy has the Stochastics oscillator, EMA and ADX indicators configured. The special thing here is that the author has created an EMA band that consists of a higher, middle and lower band, where the higher band is made of all the candle highs and the lower band is made of all the candle lows. The middle band is made of the close price of the candle. And the length of the EMA indicator is 5. Also, the Stochastics has different settings in comparison to the default 14, 1 and 3 settings over here. And if I open the chart and add all the indicators to it, then it will look something like this. Now let's see how the buy signals are formed. To get a buy signal, the following conditions should be met. The open price should be below the EMA low band. And the Stochastics fast K should have a cross above the fast D line. This is indicated by the qtpylib crossed above function. And in that case, also the fast K and fast D lines of the Stochastics should be lower than the buy fast X line. Finally, the ADX should be higher than the buy ADX line. So, if I understand this correctly, there should be upward momentum indicated by the ADX, but a pullback of the price is detected because the close is below the lower EMA. And finally, there should be an indication that the short-term momentum changed again during the pullback because the fast K crossed above the fast D again, below a certain threshold. Now for the sell signal. This sell signal appears when the open price of the candle is higher than the upper EMA band. Or the fast K line gets above the sell fast X value, and the same goes for the fast D line. If this gets above the fast X value, then it also should be closed. So if one of these conditions are met, then there is a sell signal. Now I think that this is an interesting strategy, buying on a pullback if the momentum is high. However, I have some reservations because the ADX momentum can be both upward and downward. Here, for the ADX indicator, I miss the DI plus and DI minus lines, where it determines the momentum direction. If you see on the chart, if I add these lines to the example, then you will see that there is a negative momentum over here. So in this case, the momentum is downward and the price could be even lower then, and eventually reach the stop loss setting. Now luckily in this specific example, there was a sell with a profit, but when you catch a huge bearish trend, then this might as well hit your stop loss many times before any recovery. But this is all theory. Let's find out by actual backtesting to see how this strategy performs. Now the initial backtest shows that the 4-hour time frame performs best over all other time frames. With a win rate of 68.5%, this looks optimistic, but the profit made is disappointing to say the least. Over 2,000 trades with only a 0.2% average profit is indeed what's keeping the strategy back from making huge profits. And if you look at the ROI, this is the main source of profits and all other signals only make losses. It is probable that these fast profit takings that were intentionally meant for the lower time frames have a negative impact on the higher time frames. And as you can see, the 30-minute time frame over here performs a little bit better. But it also suffers from higher fluctuations between profits and drawdown. It might be good to see if I can optimize these parameters. Maybe I can widen the ROI so that it takes profit at higher percentages. Also, the levels of the buy and sell lines could be improved, as this strategy is built to give us the opportunity to also optimize these as well. So, let's find out. It is rare to see that optimizing parameters actually makes the strategy better considering its ratios, but at the same time makes its performance worse if you look at the profits, CAGR and win rate. Sure, the Sortino ratio skyrockets and the drawdown gets much better. Also, more profit pairs respond to these changes. But overall, you put your money on the line to make a meager 25% profit over 5 years of hypothetical trading. According to my scoring and risk appetite, it is the better setup, but at a price. Considering the fact that there are other strategies that perform way better with sort of the same numbers. Using this strategy has high opportunity costs. Now, looking at the profit charts of both the before and after optimization situation, we see that the characteristics of the curves change completely. The first thing that strikes me is that on the initial setup, the drawdown occurs at the second peak of the last bull market. Also, the pairs look to me that they are evenly dispersed by winning and losing pairs. The degree of parallelism is higher in this situation, so the amount of trades happening is more, which means that there are more buy signals here as well. The underwater plots clearly show that this strategy also reacts to bearish circumstances. So every time the market drops, the underwater plots also show negative results. However, if I compare this with the optimized plot, it has totally different situation. The main drawdown here occurs in the period between 2018 and 2020, between 2 market cycles. Then it shows a constant upward movement in profits. Not much, but still it's nice to see. The amount of pairs that have positive and negative results are also even, with the exception of XEC. This is suspicious and might as well could make this result look better than in reality. Or it could also be just luck that the bot caught a pump and dump here. Anyway, seeing the amount of trades open at the same time, this looks a little bit dull and it looks like there is not much opportunity to trade. A low amount of signals could indicate that these do not appear a lot. And finally, if you started the bot with this particular strategy at the end of 2018, I think you already left the complete market in disbelief. Just before the new bull cycle, because you only would see your trading account dry up of all these losses. The other drawdown periods are almost at the same time when there are bearish periods in the last cycle. So where does this leave us? How does this strategy perform in comparison to the earlier tested ones? And to be honest, I'm not super stoked about the performance of this strategy. If you score all the ratios and performances, it still looks to provide you with a moderate performance. However, at this moment I expect a little bit more of an algo strategy for crypto. But I do like the idea of the EMA band and stochastics, because it reflects a little bit the same thought of the Keltner strategy. That performed great. However, the use of the ADX bands only makes it difficult to catch only positive momentum, because there's no usage of the DI plus and minus line. And another thing about the ADX is that it's kind of sluggish. It means that by the time the ADX rises above its threshold into the momentum zone, the signal has already passed and therefore not valid anymore. And one final thing is that I think that the usage of the QT-PILIP crossover module is also too specific. I think that the actual moment where this crossover occurs in combination with all the other signals is very rare. These have already passed or will soon occur. Especially when the signal also has to be at the exact same time when the open price is below the EMA low band. They are just too rare in combination. And when they do appear at the same time, maybe the ADX is still below its threshold. If this strategy could be coded so that there is more of a zone wherein these signals could occur, then it could provide us with much more trading signals, I think. At the moment, these signals all at the same time are just too specific and therefore too rare. Maybe if one of my viewers could test this and provide us with the new results and code, it would be much helpful, and I'll see your comments below in the comment section. But in the meantime, I will test and analyze another algo strategy for this bot. I will leave all the files and output as always on my Patreon page. This way, you as my patron can check my results and simulate this on your own setup. And in the meantime, I will test another algo to see if it's profitable or not. Thank you for watching, and I'll see you in my next video. Goodbye!